Take a look at shares of First Solar today, higher this morning after reporting a beat on the top and the bottom lines in Q1. They do reaffirm the full-year guide, but they note on the earnings call the ongoing uncertainty from trade policy as tariffs continue to impact their global supply chain. Joining us this morning in a CNBC exclusive is First Solar CEO Mark Widmar. Mark, welcome back. Always good to have you.
Great to be here. Thanks, Carl.
I think the street's probably interested in how you've managed to be so resilient, knowing that policy hasn't exactly been a tailwind.
No, look, it's been, a challenge at times, but it's been an opportunity as well that's presenting ourselves to allow us to continue to focus on how do we continue to differentiate ourselves in this marketplace and provide great technology that's adding significant value to our customers at a time when, there's meaningful load growth. And electrons are needed in order to support the expansions that we're seeing across many different industries, but obviously the focus around artificial intelligence in particular. So yes, we've been nimble and agile in managing through them. It's created some friction, but as we continue to evolve, we'll see less and less pressure as we move forward throughout the year as we continue to reshore an industry.
I have to imagine that customers are telling you we are a believer in this technology long term, even though some policymakers might not be.
Absolutely. So, most of our customers will say that, look, we need reliable, affordable energy, and we need an all-of-the-above strategy to ensure that that happens, right? To ensure that we can have diversification. The one way I kind of look at it is the military. The military needs the Navy in order to be successful for the Army. And it's no different that you need different forms of generation to think through how to best optimize those forms of generation to provide reliable energy at the most affordable cost point. So. And also what we're starting to see now is because some of the constraints with grid connection, you're starting to see more, especially on the hyperscalers, thinking through behind the meter or off-grid generation. And solar is nimble and flexible that you can do that very easily and co-locate the generation on site generally with batteries and have kind of a hybrid structure where you have grid-connected capacity and you also have off-grid capacity. And solar is a nice solution in order to do that.
I was going to ask about that because you hear the hyperscalers all the time talk about their investments in nuclear and fuel cells and natural gas, but less about solar. So what is the activity like, and what is the feasibility here of using solar to help increase access and affordability, which is so desperately needed right now for power?
Yeah, so if you think about it, Google just made an investment and acquisition of a company called Intersect. Which was about a $4.5 billion acquisition. Intersect is a great partner for us, 100% exclusive to our technology. Intersect is building, eventually will be a complex of about 8 gigawatts of capacity in West Texas. And Google made the acquisition of their portfolio of projects in Texas and some of their operating assets to enable that data center. So they're going to have 8 gigawatts, about 2 gigawatts or so initially envisioned to be grid connected, and another 6 gigawatts that will be behind the meter, which will enable a data center for Google. So those investments are continuing to happen, and those discussions are happening with the hyperscalers around how do we replicate more and more of that type of model.
Finally, on U.S. manufacturing capacity, growing or shrinking?
Continuing to add. So if you think about our U.S. Manufacturing footprint over the last slightly less than a decade, it's gone up about 10x. So we have, historically, our roots have been in Ohio, but we then added Alabama, and then we added Louisiana, which is fully ramped now, and then now we're putting a new factory in South Carolina. So across that horizon, we will have invested about $5 billion in order to add that capacity. We have a domestic supply chain, so all that is being supported here in the U.S. $5 billion investment. It'll enable about 40,000 jobs in the U.S., and enable about $4 billion of annual payroll. And that's the real opportunity with kind of the administration's American First policy, enabled by American technology, American supply chain, and American manufacturing, that we can create great economic prosperity. And then as you think through the evolution of around AI, and if you use the analogy of the 5-layer cake, that bottom layer is energy, electricity.
But can you do it without... Sorry to cut you off, Mark, but can you do that without subsidies? Aren't the subsidies running out for solar?
Yeah, they will, and they have to. We know that, right? But even without the impact of the investment tax credits and the production tax credits, solar is going to be viable and economical on its own merits. It's still the lowest form of lowest cost of energy and electricity. The other thing I think I've said even on the program before is that it's deflationary. Once that asset is installed, there is no input cost, right? It just sits there, it generates a capital investment, it generates electrons for 35, 40 years. And so it's deflationary over time. So it's a very compelling solution.